Video, we'll be going over IRS Form 1040-NR. This is the U.S. non-resident alien income tax return. This is the last part in a four-part series. In part one, we went over the taxpayer information at the top of page one. In part two, we went over the income effectively connected with U.S. trade or business at the bottom of page one. In part three, we went over how to calculate the tax and credits. And in this part, we're going to go over the last part, which is the payments, and then whether or not you get a refund, how much you owe, and then who signs at the bottom. So let's go ahead and start with the tax payments. These summary items from line 25 are all different types of forms where federal income tax is withheld from. So with your W-2, again, if you're a W-2 employee, that means that you have a job with an employer and you are specifically having taxes withheld. You would do that on Form W-4. We'll put a link in the show notes to W-4 as well as Form W-4P, which will help you if you're receiving retirement income from which would be reported on a Form 1099, for example. So a lot of people with pensions may have tax withholding questions. So IRS Form W-4 is the tax form where you can direct your employer to adjust the taxes they're withholding on your Form W-2. And then W-4P is the same thing, but for pension income, which usually is paid out on a Form 1099. And then we'll put links in the show notes to W-2, all the resources for W-2s and 1099s, and etc. So let's imagine that John Doe had a total of $6,000 taken out of his W-2 over the course of the year. I don't believe he had any 1099 income. Well, he did. Let's go ahead and just say that he had $500 withheld from there. According to the form instructions, you can also have taxes withheld from other forms based on the Form 1040 instructions. That would include quite a bit. So we're talking the additional Medicare tax, which is on IRS Form 8959. So for extremely high income families, you may need to pay what's known as the additional Medicare tax, and that's on IRS Form 8959. If you receive a K-1 because you're either a partner or a shareholder in an S corporation, you could have taxes withheld from that. You could also have taxes withheld on a variety of other forms that are mentioned down here. But let's just imagine that John Doe does not have to pay the additional Medicare tax, and there's no other tax forms that he has income tax withheld from. So each of these is broken out on Form 1040-NR. IRS Form 8805 is tax withheld by a partnership. IRS Form 8288 has to do with dispositions of real estate in the United States. And then line 1042-G is pertains to a certain part of the Internal Revenue Code that most taxpayers don't need to deal with. So these are all fairly, I won't say obscure, but lesser used tax forms. And if you have zeros here, that's okay. So again, unless you specifically know what the tax form is used for, you probably don't need to be on the lookout for it. Line 26 has to do with estimated tax payments. So a lot of people may choose to make additional payments to the IRS over the course of the year. That allows them to minimize or completely avoid any tax withholding penalties that the IRS may impose. So let's back up a second. The Internal Revenue Service expects taxpayers to pay taxes as they go through tax year and earned income. Form W-2, generally speaking, does that for you. So every time you get a paycheck, you get a little bit of money taken out. That's how W-2s work. Same with a Form 1099. You can also estimate how much tax you think you're going to owe, and then just make payment estimated tax payments. So there are several ways that you can estimate your tax liability. I usually tell people that the most accurate way is to complete IRS Form 1040 ES. There's a worksheet in there, and then you can use you can either make online payments on the IRS website, or you can use what's known as IRS Form 1040-Fee. That's the payment voucher. So you can make quarterly payments if you want. You can also have tax amounts if you received a refund last year, and I'll show you here. You can actually take line 36 from your prior year tax and make sure that you include that here. So some people will say, I've got $1,000 refund. I want to put that to my estimated tax. And then we would enter that money here. Next year, we would carry that money over here. So let's imagine that John Doe had $1,000 of tax payment that was carried forward from his prior year return. In line 27, that's for the earned income credit, which if you're filing Form 1040 NR, you're not eligible for, but you would see this on a regular Form 1040 as an earned income credit. Line 28 is the additional child tax credit from Schedule 8812. So as mentioned in a prior video, you can have the child tax credit or the credit for other dependents. So that would be here. This is the non-refundable portion of the child tax credit, and the credit for other dependents is always a non-refundable credit. But there's a portion of the child tax credit known as the additional child tax credit that is a refundable credit. So let's imagine, so we put here $2,000. Let's imagine that that's actually supposed to be $1,400. So we're going to correct this, and then that actually gives us an increase of our tax bill here. And then now we're going to take that $600, since it was the additional child tax credit, we'll put it down here. So again, basically a portion of your child tax credit would be reported up here, and then a certain portion up here. This isn't exact. Don't hold me to it. I'm not looking at the Schedule 8812 instructions while doing this. The allowable percentage could be different. That's just a placeholder. And again, this is considered a refundable tax credit. IRS Form 1040C. So IRS Form 1040C is a tax form that has to do with a departing alien income tax return. So it's not a final tax return. You would have to file an actual final tax return. But when you go through IRS Form 1040C, you would estimate how much tax you're expecting to receive. You would go through the schedules, and along the way, you may have paid taxes with that. So refundable credits and taxes are basically the same thing. So it's money in your pocket if you're due a refund, and it's less money that you owe on your tax return. So if John Doe were a departing alien, he were leaving, and he paid taxes on his way out, then he would use the Form 1040C. Line 30 is not applicable here, so we're not going to use that. Line 31 is the amount from Schedule 3. Again, that's the refundable and non-refundable tax credits. So line 15 is the refundable credits. Let's just say that he had $1,000 of other credits that he was calculating here. We're going to total all of these up, and that gives us $1,600. And then we're going to add up all of these columns here. And we've got 2,600 plus the 6,500. So that looks like 9,100. Now, we get to the part where it's the refund, the amount that you owe. You're going to complete one of these or the other, not both. So if you, and the way to determine that is if line 33 is greater than line 24, then you're going to fill in the refund portion. That means you paid more taxes than what you owe, so you should expect a refund. And then you have some options on what to do with it. If it's the other way around, if this number is more than line 33, then you still owe some money. And we'll get to that part in just a moment. We'll actually transpose these numbers and go through each situation separately. So the amount that you overpaid, let's just say that this is I think that's correct, 2873. Yeah. So that's how much the refund would be. I'm actually going to put this here as a placeholder so I don't forget that dollar amount. Basically, you have some options on what you're going to do with your tax refund. You can have the IRS send you a check. You can have your refund split up into up to 4 different accounts, or you can also buy U.S. Treasury bonds, specifically EE bonds, series bonds. And if you file IRS Form 8888, it will go into detail. You can put up to 4 different types of accounts. The IRS won't pay to an account that doesn't belong to you, so you should never pay a tax preparer in a way that where they charge you to put money into an account that they own. So you can't do that. You can't have money sent to separate accounts for yourself. So if you had a checking and a savings account and you wanted to put $1,000 into your savings account and the rest of it into your checking, you would attach IRS Form 8888 and you'll put right here. So let's say that John Doe wants to put everything but $1,000 into his checking and savings account, or checking or savings account. So he's going to enter his 9-digit routing number. If you're looking on a check, it's the number that's on the bottom of your check on the left-hand side. It's always a 9-digit number, and it's unique to your financial institution. So if you bank at Wells Fargo, you're using the same routing number as every other person that banks at Wells Fargo. If you bank at Bank of America, USAA, same thing. The account number is going to be unique to each person. So make sure that when you're filling this information, that you take the time to verify that your account number matches the type of account that's right here. So if this is your account number and that lines up with your checking account, make sure that you hit the appropriate type of checking account. If it's a savings account, make sure you check the savings account. If you want your refund check mailed to an address outside the United States, and that is not the address here on page 1, then you have an opportunity to enter that address right here. And then, of course, John Doe has $1,000 remaining of his tax refund, so he's going to enter $1,000 here. That's how much money he will have that applies to his 2025 tax return. And again, that would go right up here in line 26 of his 2025 Form 1040-NR. Now, let's zero this out for a moment, and let's just assume that the opposite is true. The 9100 and the 6227 are actually inverse, and now we're taking the difference. It's 2873 that John Doe has to pay. So he may have to pay an estimated tax penalty based on whether or not he paid enough throughout the year as he earned his income to avoid an underpayment penalty. And you would there's a form that you would file to calculate your estimated tax penalty. I'll put a link in the show notes to that. So I believe it's IRS form 2210. That's the underpayment penalty tax form. And then let's just say that he went through that form and it came out to like $53 that he underwithheld. So it would show up here. When you're actually looking at a tax return, it's almost one of the hardest things to find. It's usually just kind of spit out here. If you're running tax planning software, it'll go ahead and properly, put that information here. And then at the bottom, we have signatures, right? So the third party designee simply means if you want to have another person discuss this tax return with the IRS, then you would complete this information here. This IP PIN, if that person has a PIN number that they've chosen, then they would enter that here. That has to be the PIN number that they give to the IRS to validate their information. So, if you put in 1, 2, 3, 4, 5, and they come back to the IRS and say 5, 4, 3, 2, 1, the IRS is not going to talk to them even if their name is here. So make sure that the PIN here matches the PIN that they have and that they're going to give to the IRS when they want to talk to them. So this would be someone like if you have a language barrier and you would like maybe your daughter who's not on your tax return to communicate to the IRS on your behalf, you can do this. It's not the same as a power of attorney. They're only sharing information about this tax return. They may be asked to provide documentation or clarify questions, but they're not going to be in a position where they're representing you on your tax return. So that is a different authorization. We go into in our article, we talk about what a third-party designee can and cannot do. So you would enter yes, and then you would put like John Doe wants his father, James Doe, and then his phone number, which has to be a U.S. phone number. And then as the taxpayer, you sign, date, enter your occupation, your phone number, email address. If you have an identity protection PIN, which is a PIN that you can receive from the IRS if you've had your identity stolen and used for taxes before, that's a common fraud-related issue. Every year, usually in beginning of January, the IRS will mail each person a different 6-digit PIN number. So they will not accept your tax return if you don't have that PIN number, which you can request. There's a tax form that you can use to request that if you have been the victim of identity theft. We'll put a couple of resources in the show notes about that. Paid preparer, so this would be your accountant, H&R Block, whatever the case may be. So you should verify this, that their name is here, the firm's name and address is here. Their PTIN is a preparer tax ID number. So it's a unique number for each tax preparer that lets the IRS know who prepared this tax return for the taxpayer. And then they'll check if they're self-employed. They'll put their firm's information here. So don't accept a tax return if it doesn't have a PTIN listed here. There are people that file tax returns that are known as ghost tax return preparers. And they basically, they do a lot of shady things, and a lot of their clients end up becoming victimized by this. So when you're reviewing your tax return, if you're hiring someone, always make sure that they pay or they put their PTIN. That's a measure of accountability that allows the IRS to track down who prepared your tax return. So once you have your tax return, if you had a paid preparer take care of it, they should be able to file it for you. They might ask you for a couple of documents, like IRS Form 8879 is an electronic signature form that they might ask you to use. So I'll put a link in the show notes to resources we've created about that form as well, just so that you can get a better understanding. That wraps up our series on 1040 NR. Again, we've broken this down into 4 videos just to kind of protect your time. So if you have questions on any of the prior aspects, simply go back to the earlier video, or you can check out our article where we go in exhaustive detail about all of these different items. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's another topic that you'd like to see in an upcoming video, please hit me up in the comment section. Thank you very much and have a great day.